What's going on, traders? My name is Shark. Thank you so much for joining me. I want to do a quick recap here and some analysis on SPX, the S&P 500 cash index, as we've had an incredible rally to the upside from the April lows. And here we are making new all-time highs this week, up at the 75.17 level. And while we did close the week green, we do have a topping wick here and not the prettiest looking candle on the weekly. However, as I mentioned, did still stay green, so that is a positive. And we did have OPEX on Friday, so there was a lot of options rolling and selling going on, giving us a little bit of a needed pullback overall in the market because this has just been nonstop buy. So what do we have now, right? And last time I was really looking at the market, right? This area at 69.95 was really what we needed to hold for the bullish impulse to continue. And now let's look back to our next distribution, or excuse me, our balance range here. In this area is pointing out to me for sure as a possible break of structure that I want to pay attention to. But let's see, we had a red day on Friday, as I mentioned, a lot of options rolling, and when I was looking at the put call ratio, we were a little bit offside. So no surprise to me that we had a bit of a down day and closed below the previous day low. And so now, is this a start of a new trend? Well, we don't know yet. We're definitely going to need some more data for that. But where am I looking out for? And, right now we're in a buy the dip. I mean, things technically aren't really making sense with yields and the dollar pushing up higher. The market's just shrugging it off for now. Definitely overbought here on the daily after going full cycle from oversold to overbought, and we are just continuing to float up here. Just a little bit of momentum for the bears coming in here, but nothing really. Obviously we had it here as well, but nothing really to speak of yet. Eventually this will start to cool off. The matter, of course, is when. So what am I going to do here as I'm looking at the daily? Right now we're in the uptrend, so we got to be thinking buy the dip until proven otherwise. Well, I do think that this area here, starting around 72.32, could be interesting, and coming down into these highs right here looking interesting to me. So I'm going to put a little supply zone here from 71.50 to about 72.30 if we're just going to go with the even numbers right there, and even possibly, potentially, so we're just all doing this together for the first time, I'm going to bring it down a little bit to this area here. So that brings it down to 72.20 basically. So that's what I'm going to be watching for. I did miss this rally, unfortunately, but I will be looking to potentially go long if we do come down into this area. So that's the first thing that I definitely want to be watching right up in here. And right now, where do I think that we would have to break to get back underneath here? Well, for me, I'm looking at this equal low matching this high here. So if we start to get back below, trading below the lows from the 13th, right? So that's 30, what is this? 73.70 basically. We start trading under there. Now we do have this wick right here, the lows from the 12th, which came down all the way to 73.38 as a certain potentiality. So I think we're going to have a little bit of demand in this area. We do have a wick here. This one definitely is a little bit more telling in my opinion. So I'm going to make my next zone right here. Boom. Okay. And let's get some stuff for the bulls overhead. Right, we don't really have a supply there yet, but we'll just say that if this all really gets invalidated, if we start getting back over 74.63, and what's the high here? 74.54. So yeah, I'd much rather over the high of the 13th. And then if we do see that, we can look for trades back up into the equal high and then new all-time highs, probably looking at 7,600 ultimately. But For now, as long as we hold 73.30, 73.34, I think everything's fine. This is the first immediate pullback. Would I be interested in like long-term positions, something like that here? No, it's not a strong enough pullback for me. I'd much rather come down into the 72.20s. And that would make me feel a little bit more comfortable with my risk to reward to the highs. If that was the case, and we did see that. So certainly we could trade into here, and then I miss out again, and we bounce back up. We could also get trapped for a little bit. I mean, we had this huge rally right here, right? We ran, rested here. We have a little bit of this balanced price range right here, right? So I wouldn't be surprised also to see that potentiality again take place, and we just decide to kind of meander sideways. Now, what the range is, we don't know, but I think that's a potentiality. We'll watch out to see if we get any distribution happening there, and then we actually do get that breakdown underneath 73.30, 73.34, and then we can look to potentially fill this little volume imbalance here, this little gap, and then come down into, we might even stop at this wick, to be honest. The market's so dang strong. So that's just right. That's about 25 points underneath 7,300, the highs from the start of May. Well, watch to see how we interact around this gap. But for me, ideally, this is the zone I'd really be more comfortable looking to be a buyer in, and see if we can't come on down to here and then shoot up. Maybe we stop, then we make a higher low, right? Something like that. And then we have our low, higher low. This is our break of structure up into back into here. Probably reject, and maybe then we see that sideways action again before springboarding into the equal high, and then ultimately seeing about 7,600. But potentially, we got to watch let's go into some other day trading levels. I think that's everything I wanted to go over here on the daily chart. So let's look at some daily levels really quick, or excuse me, some day trading levels. Let's flip over to that, see what we can. Let's go to like a 10-day. Okay, maybe not. Why don't we do a 20-day? So you can see a little bit more of the price. Okay, clearly I need to extend these. My apologies. Boom. Boom. And boom. Okay, cool. Sorry. All right. So we had the gap down, traded around here. All right, so what do we need to see from the day trading perspective? We're sitting on the hourly chart right now. Need to see at the very least bulls get over the 74.20 area, but really, ideally, we need to get over the 74.55, right? This high right here, that's going to start to neutralize this hourly trend that we are trying to create overall. Obviously, we had our swing high. Now we have a lower high in the session. So let's see if bulls can actually start to bring some candles up in this area like so, right, and find some acceptance. If that's the case, we hang out over here looking for longs, right, back up right around the 74 area I'm watching, and then we'll see about coming into these lows as well, up at 74.83. But let me zoom out here. Where is this coming from? I would this is a little off. Boom. Okay. There we go. All right. It's the high here from the Tuesday 9 o'clock high and the Thursday low. Is this Tuesday or Wednesday? Sorry, excuse me, Wednesday. Right, so it's right around 74.83. They're not exactly matching. Let's see what it is. 74.84, 74.81. Okay, so that's really the area. I think if we can find acceptance over the 74.54 that we can come up into right around that zone, and then we can attack the 75s 7,500, 7,505, and see how the market reacts there. Certainly get over there, and we'll go up into that new high, new all-time highs, and matching that equal high. All right, but if the bears and the sellers, they've been basically useless over the last couple of sessions. But if we hang out under here, right, we're going to consider this probably redistribution for the next leg down. As long as we stay under 74.41, we are still sellers, are still somewhat in control, at least on the short term. Breaking underneath, we got to make a new lower low underneath 7400. I think that's going to take us down a bit further, and we can trade down into 73.80, 73.70 in this area right here. That'd be interesting for a potential buy. I think at that point we could look at a 4-hour higher low being put in, and then we could potentially look for a bounce there. So that's one spot that I'd be interested in. Am I interested in buying the lows here? I mean, we are near the whole number at 7,400, but I'm not sure. We'll have to really see how the market opens. Usually Mondays, as it's been over the last couple of weeks, have just rocket up and will fill the gap. So, that's also a possibility, of course, with this strength in the market. But underneath 73.65, underneath 73.70, we're given about a 5-point range there. Definitely could trade back down 73.40, 73.35. We'll watch that. That's going to be important. And if we break under that, we'll look for further downside, 73.20, 73.10, and then we'll look at that 7300. So there's the path, 100 points in either direction. We've got it. All right, let's just take a quick peek around in the other areas of the market. Why not? Breath here on the how many stocks in the market are trading over their 50-period moving average, coming down lower, looking weaker here. Underneath 50%, 200's not there yet, so breath there not looking too hot. All right, new highs versus new lows underneath the zero line, but nothing drastic, nothing too concerning. Okay, we've been watching this divergence on the junk bonds, still happening, starting to get a little lockstep now, but overall trend up, trend down. So this is one bearish warning flag that I have been watching, and still really hasn't played out. The divergence has just been going on forever, but watching it closely, starting to get a little overbought there, oversold, on the daily though. So that's interesting. This might tick up and help drive the markets up higher. Let's take a look at the bonds really quick. Just getting destroyed. I am in a long position against the bonds, so this is good for me. But yeah, rates are screaming right now. Short end, not as bad as the long end. Long end down almost 1.5%, just getting decimated. Okay, credit spreads. All right, right here, IEF and LQD. All right, this is still risk off, or this is still risk on. So this is good, but right here, our spread, our short term versus the junk bonds, this is not the best, right? This is starting to peak over the 50. We're going to have to watch this one closely. If this one starts to flip into risk off territory, that will be interesting, but we do have a divergence here between both the credit spreads, so that's worth noting as well. But I will watch this close, and our bond ratios here, okay, obviously with the hot PPI and everything going on, these are just screaming, and I'm sure when we look at TNX, that will be ripping as well. And yeah, this is all saying, yeah, I mean, if you're a bond holder right now, you're getting absolutely smoked. So that's what's going on there. All right, let's look at the dollar and the yields. Was looking at this earlier in the week. The dollar just rallying up. Has not affected the market yet. I think once we get over 100, that might be the point, but we're still inside this little balance range. Let's see how it interacts in this 99.40 area. We've had issues there before. Could cool off, lead off some of the Friday. Well, it doesn't really matter. The dollar's been going up and the market hasn't cared. That's why I said I don't think that this is kind of a new normalization range potentially. Let's see what happens if it really gets over 100. Then maybe the markets will start to care about it. I will say here on the 4-hour though, we are getting pretty overbought. So I'd probably, if I was a FX trader, I'd probably be short the dollar and look for some type of pullback. Okay, now TNX. Oh gosh, look at this. Just the market doesn't care. Ripping up 4.5, almost 6.4 on the yield. Just absolutely unbelievable. Like I said, I'm short the 7 to 10 year bond, but that's basically being long TNX, and this is no good for the market. And inflation. That's all I gotta say. I mean, let's see if this pulls back. I don't want to be rooting against this macro. There's just tons of problems here, and you just gotta even though the market's going up, there's other things that are going on, which I've been pretty vocal on the Twitter, which are just warning signs, and obviously we just don't know when all these things are going to come to fruition. And with that being said, we're looking pretty high up here. I could imagine that we pull back a little bit. Bonds get a little bit of a bounce. We might pull back to 4.4 here, and let's see what happens. Probably might bounce right there and then head back up into this 4.6 area. At what point, again, with the dollar going, what point is this going to really start to matter for the market? So far, it hasn't cared. So, and what are we on? 1 year? Let's just go back 3 years, just as because I want to see if we're getting, okay. I mean, when is this really going to matter? Maybe if we start getting up in this area, 4.6 to 4.7. We'll see. Either way, we're starting to get a little spicy, so this probably is going to pull back, I'd have to say. Probably longing some bonds for a little bounce play really wouldn't be crazy either, to be totally frank. Oversold. Okay, going along here. Let's look at the bigger range here. Gold, okay, with the rates going up and the yields, it's still affecting the metals trade. Overall, though, just a balance here on the futures, but back below the 9 and 20 again. Just really, metals can't get its legs under it, and you can see here. Look, the stocks are starting to come off. These yields are not conducive for gold and metals in general. Okay, I didn't update our VIX yet. The VIX futures, I have to get that contract, but VIX pretty steady. Let's see here, still over 15, so 15.75, so not an issue. Maybe we can trade up. No, we're kind of just going sideways overall, but everything being equal, I mean, I think that we'd want to go back up into 1920 again, but we'll probably head back down. VIX of the vol, VVIX, a little divergence there between the VVIX. This is probably looking like, with this down, to be honest, the VVIX down would make me believe that we'll probably rally on Monday versus head back down, but let's see, because this is an interesting. Why do we have the volatility getting crushed while regular VIX is going up? That doesn't make sense. So 1 day VIX still also flying. I got to update the futures contracts, but I'm sure we are still in contango. And I think that's pretty much everything that I wanted to go over. Take a little peek on the Dow divergence. Okay, yeah. All right, I mean, transports here, it's not a bad idea. Still massively divergent, but shoot, I'm gonna have to look. Maybe that's a trade that I honestly want to be taking. I'm gonna look into that one. Nice retest here, and looks like it's forming a base on the transport, so I'm gonna look into that. All right, guys, I think that's pretty much everything I wanted to go over with. Hope you enjoyed this version instead of futures, changing up with a little bit of SPX and the broader market. I hope you enjoyed it. I'm looking at anything put call ratio. Let's see real quick. Yeah, you can see it was a little off sides. This is why we had that down day. We got back into balance. Repriced. Okay, I think that's it. Oh, the only other thing I will mention, I did make a post about this. Okay, RSP, and we were looking at the breadth with those stocks underneath the 50 period moving average that we have less than 50% over. Okay, this definitely matters, and you're gonna see it also in the RSP. And I did make a post about this. You're going to see here, you can see, okay, we really didn't make a new all-time, we barely made a new all-time high, then fell down while we have SPY just ripping up higher and higher, higher. And this is definitely showing a lack of expansion or broadening in this rally. It's all concentrated in the AI, not even so much the chips anymore, more so the memory and things like that. So that's really what's driving this market. The rest of the market isn't really doing that well. So although everything looks fine and dandy, I think, having this broader perspective and seeing, okay, well, I need to at least be a little skeptical, or just make sure that you're able to be tactical with not seeing this all in lockstep and seeing this divergence. This is not what you want as far as a quote unquote healthy rally, healthy market. You want both of these ripping to all-time highs. That's just not the case. So again, a little canary in the coal mine, not saying, okay, that means we need to go max short the market, but just things that we want to pay attention to. All right, guys, that's all I've got. Hope you enjoyed it. If you have, don't forget, give me a follow. Really appreciate it. It is free. And other than that, hope everybody has a great weekend. Take care, and I'll see you out there in the markets.